All right, speaking of trading, let's check in with Mr. Alan Nuckman, the Chief Market Strategist at BullseyeOption.com, who is on vacation, as I understand it. But, of course, you're trading wherever you go, Alan.
Money's always be made. Now, let me just say one thing here.
Hey, where are you, Alan?
I'm in my secret surf beach in Baja, Mexico.
All right, nice.
And if you notice, the weather there in Chicago kind of cooled down over the last couple
It did
days.
a little bit. I noticed you don't like to be a part of that, Alan, despite being a so-called Chicago guy. I got my doubts.
Exactly. So therefore, you can see that I like to look forward. I like to be ahead of the curve a little bit. And just to get into one more thing, technology here, you were just talking about AT&T and Verizon. I'm not going to say who, but one of their signals here in Mexico is not outstanding this morning. So that's why we're doing it on the phone. Not video. But it works 99% of the time. It works, so we'll see. All right.
Understood.
So what I wanted to say, though, is I know there's a disappointment about last week. A couple down days. We broke to the downside of the range that we had for a month. But nothing changed. The dollar's still down. Rates are still down. Oil's still at a low level. So a lot of the positives are still there for price.
What do you think will tell us if maybe things aren't going the way for bulls here, Alan? What's the tell for the market right now?
Well, you still got the VIX ridiculously low at 22. Now, that comes into the strategy we'll talk about in a second. But we talked last week, and we weren't ready to take a victory lap until we got above 4150 in the S&P, and we didn't. So today, what we saw last week was a test of the downside support. Now, let's see if it gets rejected over the next few days, if we can get back above that 3,900 and stabilize in that range between 3,900 and 4,100 that we were in for more than a month.
Okay. So, Alan, help clarify for me. Are you drinking PBR down there, or are we trading PBR?
Well, PBR is we're partially. I'm the Latin American vibe, anyways. I'm in Mexico.
Exactly. You're looking even further south.
Yeah, I'm looking further south. So I'm looking at Brazil now. PBR is a stock that's dropped like a rock. It has dropped 40% since the end of October levels. And it's sitting around the, 940 level or so. Before we get into the price action, because I'm all about price, the PE on this is 2. 2. I don't know if you can get cheap. Can you get cheaper than 2?
Yeah, 0. It could be a free stock.
All right, we're at 2. So I thought I'd give you something to chew on anyway. All right. So this stock's been between 10 and 15 for all of 2022. Now it's dipped out, but it's made what I look for. It's called bullish divergence. It made new lows in the stock, but not new highs in implied volatility. So that implied volatility didn't spike, meaning that the short sellers are running out of strength. That's the big sign of a bottom. And so, like I said, we're 40% off the top. It's low risk reward. And oil stocks always have price pop potential. I don't think it's over for oil. Oil, you saw, tested and rejected that 70 level, and now it's bounced more than 10% off those lows.
Okay. All right, nice. So you're looking for a little continuation of the bounce. I mean, this is like a little baby bounce here. We're about 70 cents off those lows, if that. So you're really going for a stock that's been a painful trade.
Right. It has been a painful trade, but look at the risk reward here. It's been between 5 and 15 for 5 years. So 10 is kind of this midpoint magnet level that it kind of gravitates around. Let's see what it does here at this 10. What I'm looking at is a July option. July has 7 months of time. The $7 call, the low in this is $8.88. The $7 call is around 3. It's $2.40, $2.50 in the money. It's got plenty of time. So the expiration break even is 60 cents higher with 6 months, 7 months of time for good things to happen. So it's about the math. It's about positioning for success. And let's just say, hypothetically, oil prices move back more to their median level of near that $100 level where, Goldman Sachs said that's the target for 2023. Then this oil play is going to boom.
Okay. All right. So while looking for a little oil and commodity play to get off the lows, thanks, Alan Nuckman, for keeping in touch even when you're out of town.
Yeah, the surf is mushy this morning, so I had plenty of time.
All right. I appreciate it. Thanks for rubbing it in, Alan. We're here dealing with 9-degree weather. Chief Market Strategist at BullseyeOption.com. All right. Well, if the PBR trade pays off, then we'll give you a pass. Thanks, Alan Nuckman. All right, let's talk autos when we come back. It was a rough close to the week as Carvana and CarMax both got slammed, but the traditional automakers are also getting wrapped up in it. There's really been no respite after a summer bounce, and Ford and GM is going the other way now. Let's talk about what comes next in 2023 as the auto boom from COVID continues to subside.